Yeah,
It could whip back, but for now it is looking pretty good.
that 15
Um,
minutes better close strong, hopefully.
yeah. Ideally, I did want one more retracement back up so I can enter a full position, but this is better than
hmm
nothing for sure.
That's why I was saying I might take partials because it might go back up again and I could re-enter. But it's
Dude,
moving.
runners pay. In these
Yeah,
markets, bro, runners pay. So I mean, we're officially in a recession. If I'll be honest, if there is a trade worth holding, it's this one. Like even if it comes back and hits break even, okay, fuck it. It's one day. You took an hour in the morning, you tried to take a trade, it didn't work out. But if you hold this thing and it runs like a recession trade will, then you got some downside. And that whatever position size you're holding, that's going to be a fucking bag. So
facts.
that's kind of my strategy for today is I'm not really looking to be in and out. I don't really care if it comes back and hits break even. Dude, I'm up 85 points. Jesus. Damn. Damn. Dude, I'm running .05s.
Why didn't I put a full position,
I
right?
think I think we're clear from here.
Hey, never. Hey, bro. Yeah. Look, I've been doing
Facts.
this long enough to know anything can happen. Just wait until the candles close.
I need a new lower low.
Yeah, we're filling right now.
15-minute just engulfed all the structure to the left.
But
Jeez.
has it closed?
It
I mean,
has.
look, I'm in the trade and I'm holding. So I'm not trying to argue against the fact it's gonna run. Like you and I both know if this thing smashes right now, no one's gonna be happier than me. But I don't allow myself to celebrate too soon.
I feel you.
That's the easiest way to set an unrealistic expectation. Lorenzo said I got an entry at 12,606. God damn. Good stuff. 606. That's right there.
Bro, I got one from 630. I'm gonna take profits though.
Take partials.
I mean partials, yeah.
Make sure you leave something. I don't care if it's a micro, just something.
I got a .5 running.
It's looking good, but so far, no closure below the previous candle. All right, so what happened today? What is the market telling us? Especially if we look at recession. All right, let me get my camera back on. All right, people, welcome to the stream. If you guys watch this on YouTube, welcome back. My name is Roy Jr. I'm the co-founder and CEO of Chart Addicts. We're the #1 personal coaching and educational service for traders worldwide. We also offer signals on the Enigma app, enigmafx.app, if you guys are interested. What happened today? Yesterday was a very important day in the markets. Obviously, Jerome Powell, the head of the Federal Reserve, got on and raised interest rates by 75 basis points, which is an aggressive rate hike, further sending us into a recession. So there's some back-to-back news this week that's not looking too hot. Today, there was the advanced GDP release. Gross domestic production is basically the size of your economy. The size of an economy is doing one of two things. It's either growing or it's shrinking. When you're shrinking, that's not good. When you're growing, that's usually pretty good. So when you have 2 quarters, each financial quarter is 3 months out of the year. So when you have 2 quarters, which is 6 months out of the year, consecutively with negative GDP growth, then that means that technically we're in a recession. So this is the release is basically, I'll say like 3 weeks after the quarter ends. So the quarter ended July 1st. This is about 3 or 4 weeks after the news is released and the number comes out negative. So what we can see is the original April release came out at negative 1.4 or 1.6. And then the actual came out at negative 1 point or negative 0.9 for this quarter. So that is 2 quarters consecutively with negative GDP growth, and we are officially in a recession. Now, what does that mean? Have we not been in a recession before? Is it because, is anything going to be different now? So I want to explain a concept that markets are reflexive. Reflexive means that they tend to react to whatever the sentiment is. If everybody's scared of a recession, we all stop spending and we cause a recession if we stop spending. And so that's what I think is going to happen here. It's not that we weren't headed into a recession before. It's the fact that now everyone's like, oh, 2 quarters GDP, 2 quarters GDP. We're all in a recession. Individuals are going to stop spending. Individuals are going to stop borrowing. Businesses are going to stop hiring. Businesses will also stop spending on research, development, and other things. And so when all of that slows down at the same time, it causes a recession. And so that reflexive nature of the markets is kind of what we're seeing here. They started panicking about inflation. Everyone started talking about inflation. So everyone raised their prices. And we actually got a worse inflation problem. Now they're talking about recession. A lot of individuals are going to adjust their spending habits, their borrowing habits. Businesses will adjust their borrowing habits. And we're going to start to see a slowdown in the overall economy. So recession is in full effect. You guys will start seeing mainstream news talk about this, but just know that we were ahead of the game. So that's the end of New York session. So real quick, this is New York session from yesterday. If I can just block them off. Nope. I'm going to do New York in green, session overlaps in purple. Where's my London? I'm in London. Got my beat from London. Okay, so I'm going to put London session in blue right here. Market open right at 9:30. So that's one candle to the left. Entry up here. So you guys can see we're testing the London session lows right now. We do need to break below these lows. We do need to break below these lows, form a new low. Then what we can do is wait for a pullback to 12,518 or 12,550. There's about a 40-point range here that I'd be looking to go short from. All we need to do is break below this area of structure to confirm that we're bearish. Then we can wait for this pullback to either 550 or 520.
Yeah, I think if we're going to see a retracement, it'd be right here. We're at the London session lows.
Yes, sir. If the market is truly aggressive, if the market's actually reacting to a recession, it's not going to do the retracement. It'll pull back just a little bit, like it'll wick up and then just fill the wick right back down. That's a sign of a very aggressive market. So ideally, that's what I'd like to see. But we trade what we see, not what we want to see, not what we want to happen. So I'm just going to allow the market to do its thing. Does anyone have any questions about fundamentals, inflation, news, why Jerome Powell raised interest rates? What does that mean? All right, damn. There we go. So I have a 0.1 total, which for my account size is not that crazy, because I was entering what's it called, a small position before I was waiting for the big move, but I just sent out my entry in the chat. So if you guys can see, ignore all the lines. I know I got some higher time frame zones just kind of sitting here. Why am I not able to zoom in? Okay, so you guys can see my entry. Almost. You guys can see my entry, double top. I tried to get it as close to the candle bodies up here. And I did move my stop loss to break even. Okay, I did move my stop loss to break even. I see Jordan crushing it with US 30 shorts as well. We can go through some of those markets. So you guys can see on the higher time frame, we rejected the 88.6 and we just reached the first target, which is the 61. So the trades that I take, like the higher time frame trades, which is impulsive push and then retracement, when we enter off the 88.6, usually the first target is the 61. After the 61, then you go to the next 50, and then after the 50, I skip straight to the 23. I know some people, they do markets a little bit different. They'll have a TP1 at 50, they'll have another TP at the previous low, and they'll have another TP down here. For me personally, I'm skeptical of the markets. I don't believe that we just get massive drops every day. I mean, even if we do have some news events helping us out, I'm not sure we get the full move. And so as the market drops these areas, I'll shave off some partial profits. So that's kind of how I'm looking at this. We have hit the first zone, so we are about to see a retracement. How far the retracement goes, yeah, I don't really see a lot of zones here. I want to say 510, really just the previous area of consolidation right before the market opened for London. Like this. Sam says hold. Yeah, I'm telling you guys, like, even if it hits break even, this is one of those trades that you really, really want to hold. It's one of those trades that if it does run, you're going to be in big. So right now, no risk is on the table and plenty of room for this thing to move. Deshaun says I'm in at 12,621 with 2.0s. Deshaun, those 2.0s will fucking pay. I know it doesn't seem like much, but we can do some back of the napkin math here. You said 621, but I had a. So you didn't even enter. Did you enter today? But what in the wick? God. All right. That's a hell of an entry. Now look, 545 points to the downside. Each 0.01 is going to yield you $100 for every 100 points. So we got 540 points, right? And this thing could break, but let's just call it 540. 540 times 4 of those. That's about $2,080 if you hold this thing all the way to the downside. And so, like, obviously, as the market drops, you'll be taking partial profits, but the risk at this point should be protected, and you'll have basically 500 points to the downside. So if you held this thing all the way through, whether you're working with a 500 account, whether you're working with a 1,000 account, with a 2,000 account, that's a significant amount of profits in percentage terms to make in one day. So holding this thing, got that risk and reward to it. It's one of those trades. Let's see if we get a follow through. Roy 100 dropping. Good morning, fam. Good morning, Sagar. Good to see you. Roy comes from the Indian language. No, I'm Lebanese. From Lebanon. Why did you mark out London session and previous New York session. Go back to the charts, do the same thing, and ask yourself. All right, all the answers are there. Loving the new website design. It looks way professional. Saga, I appreciate that. I appreciate that. Thank you. If you guys haven't seen the new website, definitely go check it out, especially if you guys watch this on YouTube. First off, drop a like and subscribe. I appreciate you for being on the stream and for learning something new today. Congratulate yourself for being in an environment where you're growing and you're learning new things. Now, the website did get a redesign. You guys can go and find all information about us here. What we do, personal coaching, that's our bread and butter. You can work one-on-one with a qualified trader, educational courses. So if you're a beginner, intermediate, or advanced, you can get in here and learn in a structured way and kind of have a program that you can follow. And then live trading calls, which is exactly what we're doing now. You guys can hear me and some of the other educators and coaches go through the markets, live trade, do education, and everything in between. We have different memberships. You guys can get a monthly, 3 months, 6 months. Obviously, there's some discounts for getting the longer duration ones. All the information for each membership is posted right under the tab. Testimonials, if you're interested. The Enigma FX app. If you guys haven't downloaded this app, 30 days free. Your first 30 days on the app are absolutely free. Make sure that you guys are taking advantage. Just head over to enigmafx.app, where you guys can get to the website directly from our page. And then obviously FX Summit, if you guys are interested in pre-ordering 50% off your tickets for next year. So we're already locked in. Miami 2022 is when we'll be doing the next FX Summit, or Miami 2023, excuse me. So if you guys want to pre-order your tickets, 50% off, those are now available. New website, looking clean. Obviously courses, the members, we have live streams, one-on-one coaching, all the recordings, the resources. We have a crypto course, volume 1, 2, and 3 courses, a textbook, whatever you guys need to succeed. All right, so while this thing retraces, we'll try to get another entry here shortly. We'll try to get another entry here shortly. 510 is the zone I'm watching. Let me go through some of these other pairs real quick, show you what I'm watching. So this is pretty weird. This is pretty weird on US 30s part. We had this head and shoulders that we were watching. It could have potentially dropped from here, or excuse me, I had to sneeze real quick. The other option was to push up to the higher time frame resistance zone. Selling level, massive drop. I was expecting a retest of that selling level. So what we see here is that the market broke out of the consolidation, had a massive impulsive push up, and is now retesting. Where are we on the higher time frame? Let's fib this move out. Fibonacci, top, bottom. We're not quite at the 78%, but this thing for now looks like it's rejecting, so it wants to go bullish. However, if I was a betting man, which is exactly what we're doing here in the markets, I'd say most likely this thing breaks back inside the range. And so the playbook would be wait for a closure back below 31,960. If it does close below, then you can wait for a pullback and look for a smaller time frame double top formation here at 32,000 for shorts. So this is the head and shoulders. This is the area that we were looking to short. The market breaks above. If it comes back under, you can catch that retest. If this thing continues to wick up and buyers step into the market, so this thing continues to wick and the bodies close, you see where all of these candlesticks were forming support. If it closes back above those, then this thing is pushing up to the next level, in which case get out of the way, do not take shorts, and wait for this thing to reach a higher level before we short it. Nasty Naz doing the retracement right now. So we had this retracement here, lower high. We dropped one candlestick on the 30-minute, engulfed the previous 1, 2, 3, 4, 5, 6, 7, 8 candles. Even though the wick broke out of the zone, the body closed back above support. To me, that's still not the confirmation I want, but it's better, the engulfing was good enough for me. A closure below would have been ideal because that would have, I really would have had more confidence in taking this re-entry. What I think can happen is we can push up to the 550 zone. So it'll do push back up here, and then we short. Bearish engulfing, great sign. Double top, higher time frame. Okay, double tops take you down, double bottoms take you up. Double tops take us down. We just got to have a little bit of patience. We might retrace as high as 570 before we continue down to the downside. Plus, we have this massive M formation up here. A little bit of patience goes a long way. If you guys are in this trade, whether it's on YouTube or whether it's in the chat, let me know where your entries are. Nick, good to see you this morning. 599. Jesus. Okay, how are you guys getting better entries than me now? What the fuck is this? I'm out here busting my ass. You guys getting these better? Let's getting these better entries. Gali says 590. All right, well, Gali, why don't you send me a signal?
I was waiting for you to send it to me.
Bro, you got a better entry than me.
Bro, why they out here calling it Roy 100 then?
That's because of consistency, bro. That's because not trying to toot my own horn, but I'm about to for a sec. So you guys bear with me here. It's because the past 75 weeks, let's go through videos real quick. Actually, let's go through playlists. We'll go through the Chart Addicts live streams. No, I don't want to play all what? It's basically 75 weeks straight of streaming every single Thursday. Yes, we stopped for a little bit. However, you guys can see, these are all 2-hour streams. Okay, this is for this December, November. We did the 24-hour stream, basically broke the world record for the longest trading stream on YouTube. We raised money for St. Jude's. We had Q Banks and everybody else pull up and share their screens. As you can see, lots of practice. That's why it's called Roy 100. Because you win a trade once or twice, that's cool. If you do this every single week, you get to earn the title. Now, the past couple of weeks, were they a bit rough? Yes. Okay, trading is not all sunshine and rainbows. You guys need to understand that. Not every day is a winning day. I post my losers in the Discord. Okay, I'll lose $1,600 in a day. It is not a fun feeling. However, the days that I do win, I make up for it, and that's how risk and reward works. So the streams overall have been amazing. People have hopefully made a shit ton of money with us, and that's why Roy 100 got his name. Hey, Roy, will Meta and Apple's earnings affect NAS after the close? Yeah, so I mean, a lot of the large tech companies have been announcing their earnings reports after the closing bell. The thing is, we have an early report of how they did. Like if Apple was projected to sell 1 million phones and they didn't, we know that before the earnings reports comes out. Now, the thing is about the earnings reports is they're like fixing the numbers back there. And so they're putting some things under research. They're putting some things under liabilities that should be assets. They're moving stuff around to cook the books. And that's why that's why it's kind of hard to gauge those things. The market's going to drop regardless. Earnings reports for the first two companies that dropped this week, I think it was Alphabet and Facebook. Alphabet and Facebook already came out negative. And we have an interest rate hike that just happened. And then today we have the second consecutive quarter of negative GDP. We're in a recession. it doesn't matter what Apple reports on their earnings, this thing is going to continue to crash. So that's kind of the big picture here. All right, we got this nice little break and retest of the London session lows. We just need to push through and fill this candle. Once we clear this area, like this is kind of how, and I really do want to go through some basics today, just because like we gotta go through the basics. But you guys see this area of liquidity here, or this area of just like noise. There's a big consolidation range here, but over here it's pretty clear. And so areas where the market's clear, we usually have pretty smooth traffic. As soon as we get to these consolidation zones, that's where the market starts to act funky. And so we have to break through this consolidation zone, right? We got to get through this area of BS traffic and fog and all this stuff. And then we have another clear zone right here. And so basically, if we make it through this area of fog and we can make it down here, we're going to fill all the way to that downside, okay, the bottom of this New York session. So that's just like, basics of daily low, markup, reaccumulation, markup, reaccumulation, markup, distribution, mark down, redistribution, mark down, redistribution, mark down. Simple Wyckoff basics. We can go through that in a bit. I am actively looking for a re-entry. Let's be real with y'all. It's not greed, but I do want a bigger position, especially if this is the recession trade. I want to give myself enough leg room here that I can secure partial profits and hold a sizable position as well. So to do that responsibly, I'm already exposed to zero risk because I've managed to put my stop loss and break even. So now I'm looking to enter a new position, basically as if I have nothing running. It's like basically a blank slate right now. So I'm imagining that I never took the top entry. It's not running on my screen right now. And so basically I'm just looking for the trade that I would have taken had I shown up late, which is usually the re-entry. So it already did retest the lows, like not fully, but we did have a bit of a retest here. Here's the 6 a.m. low. Wait a second. That was the retest. This is the pre-session consolidation. The market came up and wicked it, and we're starting to close below this previous low. I think this is the candle that just ends up shooting down. Personally, I do want to see a bigger pullback. I don't like to enter at support, and so I won't be taking that trade. But just being observational here, we did retest that previous area of consolidation. That's 6 a.m. to 9 a.m. Eastern, 6 a.m. to 9 a.m. We came back up to retest the 6 a.m. candle, and we're breaking below the London session lows. So, like I said, there's an area of fog and confusion right here. As long as we can get through this area here, the next target will be 240. All right. The giant waiting game. Trying to see if we go up for one more retest. What are we doing here? All right, so yeah, we are forming some smaller time frame support here. I think this is where we're going to get the retracement. So here's the most recent bearish push. So what I'll do is I'm going to measure that impulsive push from top to bottom with a fib. Yeah, the 61 is sitting right at the London session highs. So we could retrace as far up as 553 before we continue shorting to the downside. All right. I'm really fucking tired, y'all. This is like waiting around and sitting and sitting around for the markets is cool and shit. You guys know what you're looking for. Keep an eye on the retracement level, 550. So this thing's going to basically come all the way back, grab everybody's break evens, and then make that move. And so I'll be looking for a re-entry at the London session high, 12,550. 12,550. When the market pulls up, I'll hang out here, but I'm not going to like, basically just going to be watching this for a sec. If you guys have any questions, put them in. Yeah, just let me know.
Definitely waiting for that 550. 61.
Or 88. We'll see. You guys know what would be really convenient if this thing just bleeds and we can call it a day. That would be very convenient. Would you put a sell limit? Not in these market conditions. Like, we're mid-recession. There's a lot of manipulation happening. There's a lot of bullshit volatility. I don't like sell limits in this environment. I know some people do. That's their prerogative. Personally, if I don't see a rejection and if I don't feel comfortable about the rejection at that zone and about the indication that the candle is telling me, I don't want to just be in a trade just because it hit a zone. If the market starts to push up with a solid candle like this and I'm not watching it, there's no fucking reason I would enter this trade ever. Okay. If I saw it wick back down and then close with a wick, then I would enter the trade. And so I don't want to just be in a trade just because it hit a zone. I need to see the candle confirmations, especially because of the market environment that we're in. A lot of people just have trouble understanding the context of the environment we're in. This is one of the most volatile times that we've ever seen in economics, ever. We've printed a record amount of money, and now they're trying to vacuum that money out of the market, and it's creating ripple effects everywhere. The tech industry is in a revolution right now and overtaking the industrials industry. So NAS and US 30 have split their correlation. Bitcoin has split its correlation to the indices. And so you're like, well, why isn't Bitcoin moving the same? And why is stocks dropping? And why is this happening? And my strategies, the same trend following strategies, the same, like some of you guys are using the traditional Forex strategies that we teach, which is essentially the multiple confluence strategy. When the market cycles shift, you have to adjust with them. And so always remind yourself in the context of where you are in the cycle. We just announced a recession today. Okay, yesterday the Federal Reserve hiked interest rates. The market is due to drop. Do markets just drop on a dime? Do they just like let us have it, or do they come back and retrace very often in order to grab break evens, to respect certain zones, and to basically shake out early entries? The market will shake out early entries. And so if the market understands that everybody knows recession means short, and everybody and their mother is on the short side, there's nobody on the buy side, then the market maker is going to have to be on the buy side. They're going to have to swipe everything through, and then they can crash the market. And so that's kind of what I've been operating under, just kind of this general understanding that markets are more volatile than usual. Has everyone here downloaded the Enigma app? Has everybody here secured the free trial or not yet? Obviously, past performance doesn't equal future results, but we have been having a pretty killer week. On the Forex side, we hit GU longs and NZD USD longs. Each one hit, or 75 pips hit for NU, 145 pips hit for GU. I called the NASDAQ longs yesterday, which is basically this entire move. We took it from 244, which was the entry, up to 410, which is about 165 points. I personally held a runner, but this was the trade that was called on the app, this long right here. We got out just in time for that little retracement, and then anybody who re-entered before the news, yeah. All right, guys, I really got to get off the charts. The more tired you are, the less good decisions that you make. So basically, I'm just going to be holding this. I don't know. There's no re-entry that I'm looking at right now, at least that I can see. Obviously, there's this price up here, but I'm just tired. I'm going to be honest. I'm going to let you guys go do your thing. If you have any questions, put them in the chat. Chart Addicts members, we're going to be in the chats going through it. I'll keep you guys posted, but I just don't see a reason to stay on the stream. Actually, yeah, I'll go through some of the other pairs first. How do you win FTMO challenges? Learn how to trade. What kind of question is that? What would you recommend to start your account? I mean, money-wise, like start with a $100 or 500 or even 1K. It depends on what your goals are. If you want to make big money, you're gonna have to invest big money. If you want to make small money, you can get away with investing small money. I downloaded the app but haven't did the sign up free trial yet. Make sure you get that done. He said, nah, don't leave. I mean, I just feel like this is going to take so long. Like, I feel like this retracement is not going to happen right now. It's already almost 10:30. We still haven't started the retracement. So at this point, it's going to be like by 11 a.m., we'll finally get up here, and then 11 is just going to stall. So we might not even get this move until noon. I definitely can't stay on here till noon. So once you guys have the levels, you can just come back every 30 minutes, check back on every 30-minute candle closure or every 15-minute candle closure, and try to get in where you fit in. Oof. Can we get a closure? Or is it going to wick back up, y'all? Can we get a closure below this blue line? This is the the higher time frame 61. Once we get a closure below that, I'm good, right? Now I'm good to go. I can trust that it's in break even, go do my thing, and that's it. That's done. He said, learn how to trade. I mean, yeah, bro. Like, this is the problem with a lot of people today. It's like, how do I pass? What's the secret to passing a funding challenge? If you know how to trade, which is the only people that really should be going for funding challenges, if you know how to trade, you know what you need to do to get 5%. You know what you need to do to get 10%. If you don't know how to structure trades to get 10%, if you don't have a strategy that you've stress tested that knows that you have a 60, 70, or 80% win rate, then it's going to be very hard to pass the challenge. It's going to be very hard to keep the money. It's going to be very hard to keep the account once you have it. So learning how to trade is the first step. You will know when you're ready for a funding challenge because you'll have understood the basic concepts of how to make money in the markets. And so then you'll just apply it to that format. You'll say, okay, I got to make, I got to risk 1 or 2% a trade, and I got to look for 3-to-1 or 2-to-1 trades. So this trade, for example, is a 3.5-to-1 risk and reward, depending on where your entry is. Some of you guys, look, if you guys entered in the 600s, your risk and reward for this trade is almost 7-to-1, which means if you're risking $100 right now, you're looking to make 700 on the downside. You're risking $1,000 right now, you're looking to make $7,000 on the downside. The re-entry has an R&R of about 3.5-to-1. So just getting a bit of a late entry, that's what it does to your risk and reward. So 3.5-to-1, you get those trades. You need how many of those to pass a funding challenge? 3.5, 3.5, that's 7, plus 3.5, that's 10.5. You need 3 good trades like this during the entire month to pass the challenge. Are there going to be some losses in between? Sure. as long as you're mitigating your losses and you're keeping them at a specific percentage of the account, then the strategy should take care of the rest. Now, if your strategy is not winning, if you look at the win rate and the win rate is at below 50%, below 60%, that's an indication that you got to get a new strategy. But if your strategy is winning, okay, most trades are hitting, but you're not holding them long enough, you're not getting the right entry, whatever it is, that's what you can improve to get a better risk and reward. God, bro. NASDAQ is so annoying. It's not annoying. I just have a short temper today because I'm tired. All right. I'm going to get off the stream. People, great to see all of you this morning. My name is Roy Dunya. I'm the co-founder and CEO of Chart Addicts. We're the #1 personal coaching service in the world for traders. If you're interested in personal coaching, courses, or education, we're the place for you. If you guys are interested in signals, we have our brand new app, Enigma FX, enigmafx.app. You guys can go download it online, enigmafx.app. Make sure that you guys get your 30-day free trial. You guys can get signals from our team, 30 days free of charge. Looking forward to seeing you guys on the app. All right. Take it easy. Happy and safe trading for the rest of the week. Peace. Let me get off the live stream first. You're on YouTube. YouTube, great to see you guys. On your way out, if you guys can leave a like and a subscribe, it would mean the world to us. Thank you so much for stopping by the stream. I'll see you guys every Monday and then every Thursday. Take it easy, y'all. All right. CA members,